Our guest today, Kathy Lean, Director of Currency at GFT, an online currency trading firm. Kathy's always based in the U.S., but joins us today in Singapore. Kathy, welcome to the Lion City. Now, looking at your dollar calls, you expect the dollar to be sold off this week against all major currencies. Why is that, when the view is that falling stocks will boost the greenback?
Well, I feel like right now, whenever equities rally, sort of like when we had at the end of the week, everyone was talking about how things are getting better. We've got the recovery trade, but when it sells off, everyone jumps in and says, okay, maybe the recovery is not that strong. I think the bottom line is that the U.S. economy, the global economy, for that matter, has gotten better, and I think there's more gas in the recovery trade, particularly since we've got a lot of Chinese companies reporting this week, particularly from the commodity sector, and commodity prices have been pretty firm in the second quarter. So I think that the breather that we had over the past 24 hours in the U.S. session and what we're seeing right now in the Asian session will probably not last for the rest of the week, and that's why I think a recovery in risk will drive the dollar lower against the higher yielding currencies.
Kathy, Trish here. What is your opinion about the euro then, if that's the case? Do you expect that it could actually gain a further strength? There's been a lot of attention recently on the euro, given the better than expected numbers out of Germany and France, and we have German IFO, like you say, later this week as well. Do you expect it could be an outperformer against compared to most of the majors?
Right, I do. And that's really important because we do have catalyst for the possibility of further or a rebound in the euro dollar in an attempt to head towards the year-to-date highs. We basically have the IFO report, shortly later this week. And with the IFO report, last week the ZEW survey was very, very strong, which is a survey of investor confidence. And we also had healthy manufacturing PMI numbers. So I think that that's going to translate into stronger business confidence. And if the IFO report does give us the surprise that we saw in the ZEW last week, that should be one of the catalysts that could help us lift risk over the next few days.
I understand you are quite bullish on commodity currencies as well, like the Australian and the Canadian dollar, but less so on the Kiwi. Can you elaborate a bit more on that?
Yes, I've been bullish the Australian dollar for some time, and it's pretty much because the Australian economy is clearly outperforming a lot of the other countries. Earlier this month, Australia reported their employment numbers, and they actually reported job growth, which is kind of a rarity these days. Canada, on the other hand, I'm bullish oil, and so we've already seen oil rise quite a bit, and I think that's going to continue to sort of lead to a sell-off in dollar CAD and a rally in the Canadian dollar. But New Zealand, on the other hand, is only rising because the Australian dollar is rising. The Reserve Bank of New Zealand has told us that they're very uncomfortable with the strength of the currency, and there's a lot of risk in that trade because at any point in time the RBNZ could come in the markets right again and sort of caution and threaten intervention, which always creates some sort of undue volatility. So I think the better trades are really long CAD, long Aussie.
What about the sterling? The British pound seems to have fallen out of favor recently when everyone read into the BOE's minutes and they realized that they were actually looking for an even bigger quantitative easing.
Right. I basically wouldn't touch the British pound right now against the dollar because for a long period of time it's been in a range, and it's a good reason why it's in a range because it did not participate in the risk rally because, like you said, the Bank of England is one of the probably the only central bank right now still looking to deliver more monetary stimulus. So there's a lot of problems still inherent in the UK economy, and I think that it's going to be a continued drag on the British pound. If you're really interested in the British pound, I think there's much better opportunities in euro pound, for example, where we had broken out to the upside, and right now we're kind of retracing a bit, but I think that there's still scope for more of the gain in the euro pound.
The Japanese yen, we have elections this weekend, and everyone's expecting the opposition to come into power. What is your take on the Japanese yen's implications? Market is quite mixed actually on this implication.
Well, I think that's exactly what you're going to see, with the BOJ election, the Japanese election, because what's going on right now is that the majority party is most likely going to lose power. But that doesn't end things. Just because we've got a change of political winds doesn't mean that the problems are going to be resolved. And there's going to be uncertainty about when Prime Minister Aso is going to resign as well. So I think that there's going to be some profit-taking in the Japanese yen going into the elections on August 30th. And because of that, that dovetails in my belief that dollar-yen could rise as equities improve towards the end of the week.
It does seem like the PM position in Japan has been jinxed the last few years. Kathy Lean, GFT, thank you so much for your insights this morning.